Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Peter Schiff. How you doing today, Peter?
I'm doing well. How are you?
I'm doing good, but, it's a lot of confusion going on, right? And so I want to try to make sense of this circus that's happening in the U.S. economy. I mean, obviously, the politics of the United States is a train wreck right now. And so I want to start with these recent comments about the Dow at 50K. I was watching a clip of Pam Bondi, and she was questioning about the Epstein files, but then she kept going to the Dow at 50K, S&P at 7,000, and the NASDAQ making all-time highs and such. And Trump said she actually did a good job in that, in responding to that. And so why is this their go-to whenever they're pressed about other critical issues? They keep going to like the stock market. I know Trump did this in his first term, but I was just curious in like your perspective on that.
Yeah, well, I mean, he's trying to point to something that looks like it's good. So he's using the stock market as kind of a report card on the efficacy of his policies, and he's making a big deal about 50,000. Well, first of all, when he was inaugurated, the Dow was 44,000. So it's not that much higher. It's been over a year, and it's only up 6,000. I mean, but 12%. I mean, the stock market was going up pretty much every year that Biden was president. We kept hitting record highs under Biden. We got to 40,000 under Biden, and Trump said we had the worst economy in the world back then. So if the stock market wasn't a good indicator of the economy under Biden, why is it all of a sudden the most important thing under Trump? I mean, I think it's irrelevant. I think what's happening in the stock market is a function of inflation. Inflation pushes up prices, and that includes the price of stocks. But if you look at the stock market priced in gold, which kind of takes the inflation out, 50,000 on the Dow, when you have $5,000 gold, that's 10 ounces of gold. That's a big decline since Donald Trump was elected. And it's a major decline over the past 25 years. So it's not like it started under Trump. But if you go back to 1999, it was about 42, 43 ounces of gold, the Dow. Now it's less than 10, just under 10. So that's a 75% decline in the real value of stock. So it's completely meaningless for the Trump administration to try to distract people with a 50,000 Dow. Because maybe the Dow is going to go to 100,000 like Donald Trump is predicting. But what if the Dow goes to 100,000 and gold goes to 20,000 at the same time? I mean, is that really something to brag about? That would mean the Dow was worth just 5 ounces of gold. That would represent a significant loss in the real value of the Dow Jones. So this is all meaningless. The fact of the matter is the economy is weak. Inflation is strong. None of the promises that Trump kept with respect to the economy are being kept. And the tariffs are not making us rich. We're paying the tariffs ourselves. So we don't get rich by paying taxes.
Yeah, for sure. Yeah, so I was looking at the consumer confidence index, and they measure high prices, how do people feel about prices, inflation, job availability, and this hit a low. I think it hit matched its May 2014 low, which coming out of the great financial crisis. And so, and I was thinking about, okay, well, if people are like really struggling to find jobs and such, and, we have the Trump administration touting the 50K Dow, and even Pam Bondi said, oh, retirement portfolios are growing. Well, it seems like there's a big part of the economy that does not have a job that's contributing to a retirement portfolio that's benefiting from a 50K Dow. And so, that confidence index kind of it screams something totally different than what we're hearing, with the touting of these numbers.
Yeah, and especially the Trump administration is claiming that their main goal is to help Main Street. They keep saying it's, Wall Street's had a great time and they've done really well, but now it's time to focus on Main Street. It's time for the workers to get a piece of the pie. But then he keeps going back to the Dow Jones. And so it's either one or the other. Either your focus is Main Street and having a stronger economy, even if that means a lower stock market, because I believe what we actually need to strengthen the economy would be bad for the stock market. Because we need higher interest rates, we need cuts to government spending. We actually need a recession now to have real prosperity later. But we're not doing any of that. What Trump is doing is perpetuating the bubble, the same bubble that was inflated under Biden and under Trump and under Obama and under Bush. One president after another has been handing the baton, the bubble baton, to the next president. And rather than doing anything about it, every president feels that his job is to get the bubble bigger and hope it doesn't pop until the next guy's got the baton. And so that's what Trump is doing right now. He wants the stock market to go up. He wants the real estate market to go up. And he doesn't care how much damage he has to do to the economy to make that happen.
Yeah. What do you think this means for midterms? So midterms have been in the conversation a lot. And I noticed the shift in some of the political rhetoric that Donald Trump would spew out, like with the caps on interest rates for credit cards or buying of mortgage-backed securities and such to lower the interest rate on housing and such. And for me, it was clear. It was okay, he's trying to buy the midterms. I'm curious, what's actually possible, for in this situation? Because it seems like, I keep thinking about this K-shaped economy where you have, the Wall Street versus the Main Street. The Main Street isn't doing as well. And like you mentioned just now, in order for if you really want to focus on Main Street, then there's going to be some pain there should be some pain in the markets because interest rates need to go higher and such. And so it kind of seems like they're in a tough spot, especially with this midterms conversation. Yeah.
Normally, the party in power is going to have some losses at the midterms. And since it's, such a narrow margin in the House, it's going to be nearly impossible for the Republicans to keep the House. So it's pretty much a foregone conclusion that the Democrats are going to get the House, which is going to complicate the second half of Trump's term because they're just going to be impeaching him, right? I mean, obviously. As soon as they get the gavel, that's probably going to be their first order of business. Not that I approve of this type of politics, but that's what we've kind of come to. But I think that things are so bad that the Republicans could lose the Senate as well. And if you look at how the last several elections have gone down, right, the last 3 presidential cycles, the party in power loses, and whoever's not in power wins. That's what happened. Trump won against Hillary because she represented the party in power. Trump won. Then Biden won because he represented the opposition because Trump was in power. And then the last election, Trump won because Harris was the incumbent party. And the reason is because for the last 12 years, we've had a very bad economy. And what you have is the incumbent party trying to lie to the voters that the economy is great, that they've done a great job, and we should get 4 more years. Then you have the opposition that says, no, that's BS. The economy sucks, right? I feel your pain. Elect me, right? I'm going to fix it. Now, of course, that's a lie too, but that's a more believable lie because when you have a candidate telling you that the economy is great and you know that it stinks because you're living in it, right? You're not going to vote for the guy who's trying to convince you that things are good when you know they're bad. You're going to vote for the guy that at least is promising to make it better because he acknowledges that it's bad. And so that's what's going to happen in the midterms. The Republicans are going to be running on the lie that we have a booming economy, that we have the greatest economy in history. And the Democrats are going to be running a more honest campaign that the economy is no good. Now, they're still going to lie that they're going to fix it, which they're not. But That's the more believable lie. That's the lie that wins. You acknowledge how bad things are, and then you just lie that you're going to make it better, because at least you're giving the voters some hope. If you're telling the voters it's already great, so just shut up and stop complaining, that's not a winning strategy. We know that from the past. So the Republicans are in a lot of trouble, which means the country's in a lot of trouble, because, I don't like what Trump is doing and what the Republicans are doing, but I also don't like what the Democrats do.
No.
And I'm fine with divided government. That's generally better than one party having the power, even if it's the Republicans, because they've already proved that when they have power, they don't use it, for good things. They do bad things with that power, like they're doing now. But the worst of all possibilities is when you have all the power in the hands of the Democrats, which I think is what we're going to be looking at in 2028.
Yeah, that sounds very grim too. That's a grim outlook too, Peter. Yeah, I can only imagine. So just thinking about midterms in terms of the industrialization policies that Trump is advocating for. So we have a lot of, the narrative is like, okay, we need to reshore manufacturing. We need to, deregulate some of these industries where it takes a long time for permits for critical minerals and such. We've had he signed I think it was a 12 billion critical mineral stockpile, which is peanuts compared to what China is investing in their infrastructure and in their in their stockpiles and such. And so I'm kind of curious if a change in the midterms could be disruptive to some of those policies, or can he just unilaterally, kind of execute those policies?
Well, I mean, hopefully they'll be disruptive because the policies are bad. I mean, I agree that we need to make more stuff ourselves. There's no question about that. But the way to get there is not tariffs. Tariffs are actually counterproductive because they make American manufacturing less competitive, because a lot of the components that American manufacturers use are still imported. And now all of that stuff is more expensive. And also the tariffs are very erratic. And I don't think anybody really wants to set up shop in America at this point. I think what Trump is saying about all the investment coming into the country is just a lie. I don't see it happening. In fact, the U.S. dollar has been very weak. It's at a new record low against the Swiss franc. Central banks are moving out of dollars into gold. That doesn't look like money coming into the United States. To me, it looks like money being pulled out of the United States. In fact, the U.S. stock market, Trump wants to brag about it. Since he's been elected, the U.S. stock market is about the worst performing stock market in the world. So all the other countries are doing way better last year. Huge outperformance of international stocks. Massive outperformance again this year. Look, I have a dividend payer strategy, my core asset management strategy. It was up 62% last year, foreign dividend paying stocks. I mean, the S&P was up less than a third of that. Year to date, that fund is up 13%. The S&P is barely up 1%, if that. So, if money was flooding into the U.S. like the president claims, why is our stock market doing so poorly in relation to the rest of the world? It looks like the world is pulling money out of the U.S. and investing in their own markets. And that's what's happening. And meanwhile, not only do the tariffs make American manufacturing less competitive, but it's also, making things more expensive. And so Americans who are already struggling with higher prices from inflation now have to deal with higher prices from tariffs. And, Donald Trump and his administration, they continue to claim that the tariffs are not paid by Americans, that they're paid by the foreign producers, which is utter nonsense. The Fed just did a study, and they put out the study, and the study concludes that, no, it's American consumers that pay the tariffs. But from my perspective, the study was a waste of money. I mean, that's just so basic economics. There's no point in even studying it. But what people have to be concerned about, if Donald Trump and his advisors know so little about basic economics that they don't even understand tariffs, then, we're we're in a lot of trouble because they clearly don't understand more complex economic issues. Right? They've got everything wrong.
Yeah, it's I kind of think of those clips when he says we brought in trillions and trillions and such, and it's kind of it's kind of interesting. But just thinking about the whole tariff thing. I mean, right now that's under. We're pending a decision from the Supreme Court, and I don't know if they're just gonna what's gonna happen there. But I mean, it could be some form of restriction on what tariffs he could implement without Congress or whatnot. So
I think, first of all, I wish the Supreme Court would come out already and strike this stuff down. Hopefully they do, because clearly the president does not have the authority to just unilaterally tax Americans. I mean, that's not what the framers had in mind. Donald Trump is not a king, right? I mean, he doesn't live in a palace, although he seems to be turning the White House into a palace because he kind of fancies himself as being the king of America. But the way the country was organized, only the House of Representatives, which is the most responsive political body to the people, because House members are up for re-election, all of them every 2 years. And if you go back to the original concept of the United States, the Senate was not even elected by the people. The senators were appointed by state legislatures. So the House was the only body that was directly accountable. And that's the reason that the framers said that all tax bills, all revenue bills, must originate in the House, because they wanted all of the people who wanted to increase taxes to have to explain that to the voters who they just taxed, right? And tariffs are taxes. They're clearly defined in the Constitution as taxes. And so tariffs have to be imposed first by the House, and then if the House passes it, then the Senate has to pass it, and then, only then, after both houses of Congress approve of the tariff, then the president can sign it. But he just can't just slap tariffs on, because he wants to, anywhere he wants. There's no constitutional justification. Now, I know that in the past, Congress has delegated some limited authority to the president with respect to negotiations. So he can negotiate trade deals, or if one country has a tariff on our goods, we can kind of match it on their goods. But that's not what the president is doing. He's way exceeding that authority. He's making up phony emergencies. And the tariffs that he's calling reciprocal aren't reciprocating for anything. He's imposing massive tariffs on countries that barely have any tariffs on our goods. But tariffs are always taxes on the citizens. So if Canada has tariffs, they're paid by Canadians. That's the Canadians' problem. They're the ones paying the Canada tariffs. Tariffs in Mexico, they're paid by the Mexicans. Right? So if Canada is taxing their citizens and Mexico is taxing theirs, why do we have to match that? Why do we have to do the same thing to our citizens? Let our citizens trade freely with whoever they want. That's the best policy, is free trade. Yeah.
Well, I don't know if we're going to get a tariff refund check or what, but I know that was thrown around. So what happens if the Supreme Court rules against this? Like, it seems like that's going to be like a mess, to sort through.
Yeah. Well, look, it would be a bit of a mess if they have to return all the money. But, I'd rather have them have to return the money than keep the precedent of allowing the president to impose these tariffs. Because if the president has this power, the next president is going to use it too and abuse it even more and expand it even more. I mean, maybe they can impose a wealth tax as an emergency. I mean, who the hell knows what they're going to say? The wealth inequality is an emergency. So the president says, I'm just going to impose this tax on rich people. I don't know what they're going to do. But, it's the camel's nose under the tent. You give a little bit more power to the executive, and then they take that and they abuse it and they get a little bit more. The Supreme Court has already allowed Congress and the president to go way beyond what the Constitution authorizes. Most of what the government does today is unconstitutional. So we've already established a precedent of allowing Congress to usurp power not authorized to it by the Constitution. And I hate to continue that trend. But Trump has already said, look, regardless, I'm going to figure out another way to get around it. So even if the Supreme Court says I can't do this, I'm going to do it anyway.
Our project is right in the southeastern corner of Wyoming. In the space of 4 years, fully engineered, fully permitted.
The ASIC is what caught my eye, $937 per ounce.
110,000 ounces per annum. First year of production is the most impressive. 132,000 ounces of gold, 24 million pounds of copper. You really want these things front-end loaded like that. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
I wonder what that signals to our competitors, when you think of like the tariffs being used as a way to try to, bully other countries or other nations into certain agreements or not to get into certain agreements. I think he threatened the 100% tariffs on Canada for signing a deal with China and such. And so when these other nations see that, if the Supreme Court rules against this and these other nations see that, that this tactic is ineffective, I kind of wonder, like, what is that? What kind of response does that?
Yeah. Look, I don't think it's going over very well with the rest of the world. And look, even though the tariffs are not taxes on Canada or Mexico or Europe or China, they are an annoyance because what the tariffs do is they make goods that are imported, let's say from Canada, it makes Canadian goods more expensive for American consumers. And the result of that is that American consumers buy fewer Canadian goods because they don't have an unlimited amount of money. So if prices go up, basic economics means demand goes down. So Canadian companies that were selling goods to America will sell fewer goods. And so, yes, that is an annoyance because they have these relationships set up and now they're being disrupted. Now, it's a bigger annoyance to Americans who now have to go without things or pay more money to have stuff than they were paying before. But the Canadian companies will simply find new customers for their products. There's a whole world out there that, needs stuff and has stuff that they could trade. And of course, they can consume more themselves instead of shipping stuff to us. So it's a nuisance, but it's manageable. But it obviously pisses off all of these other countries that Trump is doing this. At the same time, he's lecturing the world about how the world, owes us, how we're responsible for all the economic growth, how we're the most important because we're the big customer, forgetting about the fact that the world has to lend us the money to keep buying. Otherwise, we can't buy. But the world supplies us with goods that we can't produce, loans us money that we don't save. And Trump is saying that, that we're getting screwed over. The world is taking advantage of us. And if, from my perspective, it's the other way around. And I think that's how the rest of the world looks like. We're pretty ungrateful here after, the exorbitant privilege that the world has given us to have the reserve currency and what that has meant, how that has provided a massive subsidy to allow Americans to live beyond our means. And, we have this big military now because of this. If we didn't have the reserve currency, we could not spend all this money on the military. We would have to cut military spending. But then when Donald Trump turns around and says, well, we're just going to invade Greenland. We think we need Greenland and we're just going to take it over because we can and there's nothing you can do about it. That's not going over very well either. So I think we've pissed off a lot of people and a lot of countries that want to take us down a few pegs. And that's why you're getting this move to de-dollarize. Because once the dollar collapses, you kind of neutralize our power because now we're going to be dealing with a massive economic crisis. We're not going to be able to, invade or even talk about invading Greenland or anybody else when they're rioting in the streets, because prices are so high and because there's shortages and because, there's rolling blackouts and there's massive unemployment. I mean, this is, what's coming. And people are clueless that this kind of economic crisis is right around the corner, but it is.
Yeah, definitely. So just really quick, so what is the tariffs like? Is the money just going to a bank account? Or I don't see it decreasing the national debt. I'm looking at the national debt right now.
Well, the government is definitely collecting a lot of money on the tariffs. But, remember, we had big tax cuts as part of the big, beautiful bill. And we also had increases in government spending. And so the tariffs, are kind of getting swallowed up in that. So you don't really notice it. But yes, without the tariffs, the deficits would be even bigger than they are. The tariffs do help because it is revenue that is coming into the U.S. Treasury. But the source of the revenue is Americans. And it's not, And the longer the tariffs remain in place, I mean, it's probably true that maybe foreign producers may have absorbed a small amount of the tariffs initially by cutting prices a bit. But I think the longer the tariffs are in place, the less likely that is to happen. But the other thing, too, it's not only do we have tariffs making imports more expensive, we have a weak dollar making imports more expensive. Because one of the other lies or promises that Trump made was that the tariffs would strengthen the dollar. One of the ways foreigners were going to eat the tariffs was in the decline in their currencies. They were going to have a weaker currency to offset the tariffs. So we were going to get to import stuff cheaper. But that didn't happen. Not only didn't it happen, it went the other way. The dollar went down. The Chinese yuan went up. It was up like 5% last year. So in addition to Americans paying tariffs on Chinese goods, they had to pay 5% more based on the foreign exchange on top of the tariffs.
Wow. Yeah. Yeah, man. It's a lot of loopholes and such, to get into our pockets. So Kevin Warsh, the nominated Fed governor, I'm curious in your perspective on him. So some people say that he was a hawk before, and I personally don't think Trump is going to bring in a hawkish Fed governor. Or make a Fed nominate a Fed chair that's hawkish, and so I'm curious. What do you know about this guy? Do you think he's going to be even more dovish for the Fed or whatnot?
Yeah. Well, first of all, I always considered that Powell was pretty dovish, and the reason that Trump has such a big problem with Powell was that he wasn't dovish enough. Right? He wanted more rate cuts. He wanted sooner rate cuts, bigger rate cuts. And so he's obviously not going to replace Powell with somebody who's a hawk, somebody who's like going to hike rates or somebody who's going to, start, shrinking the balance sheet. There's just no way. I mean, it would make no sense for him to do that. He would just reappoint Powell before he would do something like that. So I don't believe that for a minute. I believe that the White House floated those rumors to the media as a distraction. I think it was also part of an attempt to manipulate gold prices and silver prices down because they were hitting record highs. And part of it was because of the fear that he was going to nominate a puppet, that he was going to control, and it was just going to be no more Fed independence. So I think he wanted to, throw a curveball by kind of raising the possibility that, hey, this is somehow an independent pick. This is like, Trump went outside the box and actually picked a hawk who's going to be independent and who may hike rates. And I think that's all BS, because what they're trying to do is when Walsh does exactly what he has been told to do and what he must have promised to do as a condition of his getting the nomination, he is going to cut rates, and ease up on policy. But now the White House is going to be able to say, well, this just must be his independent judgment, right? He's a hawk. And if he's cutting rates, well, it must really mean that that's the appropriate thing to do, right? It's not politics. He's independent. So I think they're trying to set the stage for that kind of BS. But, I ain't buying it. And I don't think most of the world is going to buy it either. I think it's pretty clear what's going on here.
Yeah. So so to my understanding, like the Fed governors have to vote on the interest rate policy for the month, whether to cut, raise, or whatever. And so I know that right now Powell is being investigated. I don't know if he's still under investigation or what. Lisa Cook is still waiting on the Supreme Court decision and such. And so, I mean, that could potentially be two Fed governors removed. I mean, obviously you have a chair coming in, but then if Powell, because I think Powell can choose to stay on if he wanted to.
Yeah, I mean, the precedent is that once you've been the chair, once you lose that job, you kind of bow out, right? Because, you don't want to kind of have a new chair and an old chair, sitting around the table together. Because it's kind of like, hey, there's a new king. We don't want the old king, right? It's like, so it's normally a courtesy to the new guy to say, look, the old leader is gone, because if, people might still defer to the last Fed chair. And that's why even when the Fed chairs typically resign, they don't even criticize. They don't, they don't second guess what the new guy is doing. They just go out and give speeches, and they make a ton of money. I mean, these former Fed chairs, they go out and speak, and they get $250,000, to just say, 30 seconds off a teleprompter. So normally they want to retire onto the speaking circuit.
Yeah.
And so at the end of the day, that's what I expect Powell to do. I don't think he's going to stay there to be a thorn in Walsh's side. And I think he's going to be happy to start collecting those paychecks.
Yeah.
Because you can't, I don't think you can make that money while you're still chair.
Yeah, definitely. And then the Lisa Cook situation, I mean, obviously that's still up in the air. But I mean, if Trump could fire her, if the Supreme Court rules that, then he could replace her. Is that correct?
Yeah, and I never thought that Lisa Cook was a big hawk either. I mean, she's pretty dovish. So I don't know why he's got such a big problem with her. But apparently he just wants to have his own people at the Fed, his own guys, so he's 100% sure they're going to do what he wants,
Okay, got it. Okay, so let's talk about gold. So gold is still hovering at about $5,000 per ounce. I'm curious, because you've posted these clips of like you've been on mainstream media. Mainstream media would criticize you for these gold targets, or you promoting gold or touting gold or whatnot. And it seems to be like a major shift. I mean, I've still been seeing some articles that kind of attack gold in some ways, but it seems like the mainstream media is starting to hop on this train as well when gold's at 5,000 instead of when it was at 1,600.
Yeah, when I was making $5,000 gold predictions, back in 2011, 12, 13, when gold was like 1,200, 1,500, not only were they making fun of me, but they were accusing me of just trying to scare people into buying gold, that I was just a gold salesman and I didn't even believe it myself, and that I should, really be ashamed of myself because I'm telling people to buy gold, right, when they could be buying the stock market, and they're going to lose money because they're missing out on the stock market. When I never told people to exclusively own gold. I just said own some gold, right? I said don't not own it. It's going to go up. And as it happens, it's done better than the stock market. So to the extent that somebody didn't buy the U.S. stock market and they bought gold instead, they're better off. But, they never used to attack people for, who were in the stock market, who managed, they were brokers or asset managers, and they would come on and they would talk their book, and nobody ever attack them. It's like, hey, come on, you're just saying that because that's your business, right? You're just pumping stocks because you want people to buy. They all of the criticism was reserved for me because I was saying buy gold, something they knew nothing about, and they didn't care about it. Well, clearly they should have, because gold has done better than the stock market for 25 years, 26 years. And there's a reason for that. I mean, I knew why the price of gold was going to go up. It wasn't just some random thing. And I wasn't telling people to buy gold because I sold gold. I got into the gold business because I thought people should own it. And I saw other companies were overcharging people for gold. And so I set up my own company, Schiff Gold, so that people wouldn't get ripped off when they bought gold. But years before I was selling gold, I was still telling people to buy it because I thought they needed to own it. I was still, stockbroker, but I thought people needed to own gold. But yeah, now I notice that when people come on and they say, oh, $7,000, $8,000 gold, whatever. I mean, yeah, they don't get laughed at. They don't get made fun of. And they never made fun of the Bitcoin guys. I mean, I see these Bitcoin guys who not only own Bitcoin, but their entire livelihood is Bitcoin. They're in a Bitcoin company. And they go on, they say, Bitcoin's going to 200,000. Bitcoin's going to 1 million. And nobody ever questions their sincerity. No one says, oh, come on, you're just saying that because you have a Bitcoin company, right? No, nobody ever questions their objectivity the way they question mine. Oh, and the way they deal with it now, like on a CNBC, I haven't been on in over 10 years, right? They stopped having me on because of, my forecast. Meanwhile, my strategy is doing great. People who invested in gold stocks now over the last 10 years have done better than the S&P. Mm-hmm. I've had a big weighting in gold and silver stocks, and now over a 10-year time frame. Now, that wasn't true 2 years ago. We were way behind 2 years ago. But in the last 2 years, we caught up and then passed them. And I think that this trend is going to continue. So I think over the next several years, people who are following a mainstream U.S.-focused approach are going to fall further and further behind people who are following my strategy, which is gold and silver stocks, physical precious metals, but also non-U.S. stocks, foreign stocks, emerging markets, resource-type investments. This is what's going to be making money for many, many years to come. The stuff that worked in the past isn't going to work and is not working in the present, and it's going to work even worse in the future.
Yeah, I'm curious if you've received any calls or emails from some folks from back in the day, like, hey, Peter, you were right. Just saying like, hey.
Well, they still want to say, well, I was too early, right? I mean, I was predicting, I didn't say it was going to take 12 years to get to 5,000, which is true, right? I didn't think it would take this long. In hindsight, yeah, I mean, I'm surprised that it took until 2026 for gold to get to 5,000. But because it took so long, it isn't going to stop at 5,000. I now have a much higher target because when I was predicting $5,000 gold in 2011, 2012, I had assumed that other things would have happened to have gotten the price up that high, which haven't happened yet. We haven't really had a dollar crisis. We haven't had a sovereign debt crisis. So that's still in our future. So it's still going to happen, but it just means when it does, gold's going to be a lot higher than 5,000.
Mm-hmm. So you said
we kicked the can down the road for a lot longer than I thought back then.
Yeah. So you said you have a higher target. So just curious, and what are you thinking for gold in this bull cycle?
Well, I don't know where it's going to peak out. I mean, 15,000, 20,000. I mean, I think 10,000 is pretty much a lock over the next few years. But, it could go a lot higher. It just depends on how the scenario plays out with the dollar and the bond market. But, I would not be surprised. We're 10 ounces of gold. As I said, the Dow is worth 10 ounces of gold. It was worth over 40 25 years ago. I think it's pretty much almost a sure thing that we're going to go down to 5. The record low for the Dow priced in gold is around 1 to 1. And that happened twice, in 1932 and 1980. Now, if the Dow and gold are 1 to 1, the Dow's 50,000. I mean, if the Dow just stays here, then gold goes to 50,000, right? Now, the Dow could crash. The Dow could go to 20,000 and gold can go to 20,000. That's still 1 to 1. But if we just get to 5 to 1, which I think is a very realistic number, if the Dow stays where it is at 50,000, gold needs to go to 10,000, and now it's 5-1. But if the Dow rises, then gold's got to be higher than 10,000 to get. If Trump is right, and the Dow goes to 100,000, well then gold's got to go to 20,000 to get 5-1.
Yeah.
But I think we're going to be at least 5-1, but I think it's going to be a lot lower. I think we're going to get close to 1-1, maybe not exactly, but maybe below 2-1. Before it bottoms out. And my thinking would be, if you could buy the Dow Jones for less than 2 ounces of gold, you should do it. You're probably getting a really good deal.
Yeah.
But right now, at 10 ounces of gold, I still think the U.S. stock market's overpriced.
Yeah. Okay. Got it. So, what should investors be thinking about? So, obviously, gold going higher. Some investors are thinking of gold in terms of, they just want the price to go higher. But really, it's money itself, right? The physical gold is money itself, and it preserves your purchasing power. And so, and obviously, the gold stocks are a different way to get leverage if you're wanting to make a bet on the gold price going higher and cashing it out for dollars. But I think about the recent washout, which I don't know if that was a combination of factors. I assume it's a combination of factors. I don't know if it was the paper markets or what, but we have more new investors coming into the space, and they see gold at 5,600, 5,500. They buy in, gold crashes down 4,900. People typically weekends get washed out of that. And so what should investors like that buy physical gold be thinking about when they're buying that asset?
Well, I look for physical gold. I think that 5,000 is about the floor now. I mean, whenever it goes below 5,000, it doesn't get much below 4,900, and it doesn't stay there for more than a day. So I think that's really the new support level for gold. So people should be buying gold here, not thinking they're buying the high, but they're buying the new floor. Right? Silver, a lot more volatile. I'd say the support in silver is around the low 70s, but it's been very volatile. And there's been several days, all of a sudden they whack silver down $10, $12. So, you got to be a little bit more careful in where you're buying it. But I think if you're buying it in the low 70s, I think you're pretty good. But if you end up buying it at 85, 90, you better be prepared for it to come down. And if you're buying it at, 90, you should not buy it all. Just buy some and maybe you get a pullback. But I don't know how long this volatility is going to last before silver just goes and makes a new high. But the high was 121. So even if you're buying it at 90, you're still buying it $30 below the high, right? So you're not buying that. You got a pretty good correction here already. Now, the mining stocks are a whole different animal. I think they're ridiculously cheap. And the reason for that is, yes, they've gone up. I mean, they've tripled. But the price of gold and silver have tripled. The stocks should have gone up a lot more, given the leverage they have. And the reason they haven't is because investors are still so skeptical of this rally. They've been skeptical the entire time. So they're not willing to reprice the mining companies as if gold and silver are going to stay at these prices. They expect the prices to fall. And so they're not, ratcheting up their earnings estimates for the outer years because they expect that by then gold and silver prices will be down. But not only are they wrong to believe that the gold and silver prices are going to fall, they're wrong not to understand they're going to keep rising. So the earnings estimates are way off on these companies. And that's why they're actually cheaper now than they were a couple of years ago before they tripled. Now, to me, I bought them all back then. I was buying them hand over fist because I knew the gold and silver price were going to go up. I knew the market was wrong. But the people who were wrong a couple of years ago, they're still wrong. Even though the prices went up, they don't believe it's sustainable. So they're wrong again. So I'm not buying a lot of gold and silver stocks right now myself because they're already such an overwhelming portion of my portfolio that I've been buying more energy names. I've been buying more emerging markets, stuff like that, just because my gold and silver portfolio is now such a large part of my overall portfolio, given the gains. right? Because I was 50. They were 50% of my portfolio before they went up. Right?
Mm-hmm.
So, but for people who are just coming on board, if they don't own any gold and silver stocks at all, they're the first stocks I'm saying you got to buy. I mean, they're a slam dunk as far as I'm concerned. But yeah, and I manage a gold fund too, which I think is a great opportunity because our gold fund has underperformed the indexes because we have about a third in these small, real junior miners, which have not moved nearly as much as the bigger companies, but which I think have the potential to move up a lot more as the bull market matures and investors have more confidence in the longevity. So, it's great to be buying my gold fund. The symbol, if you want, you can get it no load at any discount broker. It's EPGIX. It's the Euro Pacific Gold Fund, EPGIX. Or you can go to, Europac.com, talk to my advisors. We also have separately managed accounts where we have strategies that are in gold and silver mining stocks. Now, we also have, more broad strategies, foreign dividend-paying stocks and things like that. But we do have a core strategy that is focused on mining. And obviously, it's had great returns last year and it's having great returns again this year.
I'm curious, did you tune into any of the Nico Eagle? I think they had the earnings call or something, but
no, I noticed that, it beat earnings estimates, and obviously AEM's earnings are substantially higher than they were a year ago. So you have incredible growth, but the stock is only up 5% today after being down more than that yesterday. It's not even at a 52-week high. It's about $10 below the 52-week high. And I think that AEM, which has typically traded at a premium to its peers because it's probably the best managed major gold company out there, the premium that it's trading at now is about a record low. So investors are not paying up to own AEM. So it's actually a pretty good time to be buying it because it's normally a lot more expensive relative to its peers. But I think that, their earnings are going to keep on growing because gold's not going to stop rising at 5,000. It's going to 6,000. It's going to 7,000. It's going higher. And so their earnings are going to keep on growing. That's not the case. A lot of other companies, that have much higher valuations don't have that kind of earnings growth that you've got in the gold mining space.
Yeah. Because I was thinking about some of the companies I own. They have earnings coming up the next week, and this isn't financial advice audience, but like Wheaton Precious Metals, for example, and they're in gold at these levels, right? They're just going to be printing cash, right? And it still seems like there's not, I remember, the tech sector, they come out with these earnings and the stocks would just like go parabolic after earnings and such. And I'm thinking like, okay, well, these gold stocks, like they're printing cash at $5,000 gold. They're factoring in $2,000 an ounce gold or even less than that. Same thing with silver.
And I think the royalty companies also have been underperforming recently because they were some of the only companies other than like an AEM, but Franco-Nevada, Wheaton, during a 10-year period where gold stocks went nowhere to down, the royalty companies were rising because they kept making money. Because what was happening when gold went from 1,000 to 2,000, the cost of mining went up more than double. So the miners were having a tough time, but the royalty companies, which were getting paid off the top line, their income was growing because it was the top line. But when we finally started to move up in 2024, where gold prices started to outpace mining costs, all of a sudden it was the miners that had the leverage, and people were putting money in there, and I think they were taking it out of the Wheatons and the Francos. And as a result, those stocks are now really cheap. They should have gone up a lot more than they did, but I think, they got cannibalized. I think that rather than having a lot of new money come into the mining sector, I think some of the people rotated out of the more defensive mining stocks and then bought like the IM Golds and the Kinross Golds and the Alamos Golds and, you know, a lot of these companies, New Gold, and, you know, and they've had much bigger moves now recently because that money has come in. But I think now these royalty companies, to me, look like a pretty good deal. And especially if you get a big pullback in the metals or something, I mean, they're probably a safer way to play. But I don't expect a big pullback. I expect, you know, we're going to have small pullbacks because there's so much money coming in to the space. You know, not just the central banks, which are going to expand their gold buying, but the private investor demand that really wasn't there for decades is now there. And I also think a lot of the money that went into crypto and a lot of the institutions that put their toe in the water with crypto as, you know, a dollar alternative, now that they don't like the temperature, I think they're going to look at gold, you know, as a more viable alternative for the de-dollarization trade, as a safe haven, as an inflation hedge. Crypto is not going to deliver on that promise, but gold is.
Yeah, for sure. So I'm curious in your perspective on because we had that horrible news with Vizsla, the miners at Vizsla, and in Mexico with the cartel and such. And so a lot of investors are like reassessing, like, you know, jurisdictional risk and in Mexico and such. And, you know, I'm just kind of looking at the sentiment on X. And, you know, to my understanding, it's like, okay, well, the government is supposed to like protect the people. Like, you know, aren't the mining companies paying taxes to the government, and the government are supposed to protect the people? And so, you know, I was kind of curious about like, do you think that's being overblown, or like, you know, and not?
Yeah, I mean, I think Mexico is a relatively good jurisdiction to be in. And so to the extent that there's these kind of fears, which happen all the time in mining, it's generally a good idea to buy the dip. You know, B2 Gold had a similar political scare. You know, it's par for the course in mining, which is also a reason to always be diversified. But when you get a big decline because of these kind of concerns, I typically want to buy that because, you know, it usually is overblown and it blows over.
Yeah.
You know, the same thing happens with tobacco stocks. I mean, I love to buy tobacco stocks when something happens and they get killed. Some ruling comes out, some politician does something, there's some lawsuit because they've been great money-making machines, you know, these tobacco stocks. But every once in a while, they just get killed. But they always come back. And so it's a time to get in and get a better yield because you're buying it at a lower price and you pick up a good yield. You know, maybe once in a while, I mean, one of these rumors could be true and you could get burned, you know, by buying a company that's going down because of a political risk. Maybe it actually happens. But if you do it all the time, you know, I think you're going to be rewarded far more often than not. And over time, you'll still probably make money, even if occasionally you get burned.
Yeah, for sure. And lastly, I want to get your perspective on platinum, palladium. So I've personally been loading up when we had the sell off. Just curious in what your perspective is on those two.
Yeah, I mean, I thought it was really overdone when platinum was a third of the price of gold. And I was telling people, look, you got to buy platinum. And we sell platinum at Schiff Gold. We don't sell a lot of it. But I was telling people on my podcast, you know, gold's 3,000, platinum is 900. I mean, come on, this is ridiculous that platinum is this cheap. So I knew that one or two things had to happen. Either gold was going to go way down or platinum was going to go way up. And since I didn't think gold was going down, it was obvious that platinum would go up. And so it looked like a good buy. And it's obviously not as good a buy now because it's not 3-to-1, but it's still, you know, like 2-to-1, right? I mean, I remember most of my career, platinum was more expensive than gold.
Yeah.
And, you know, that's why the Platinum American Express card is more prestigious than the gold card, right? Because platinum was the more expensive metal. You know, so now it's kind of upside down where, you know, the platinum card, you know, is still the top card, although now they have the black card. So, you know, but But gold is still beneath platinum in the hierarchy of American Express. And most people, if you're a platinum member, if you're a platinum sponsor, that's always better than gold. And that's because platinum was more valuable than gold. So I think that's probably going to happen again. I mean, I doubt that gold is always going to be higher than platinum, but I don't think it's going to be resolved with a crash in the gold price. Mm-hmm. But inflation is driving metal prices higher. Platinum, palladium, but also copper and nickel and zinc and all these metals are going to go up and are going up. And it's not just metals. It's agricultural commodities. Finally, energy. Energy had been the laggard, particularly oil, but now oil prices are, starting to move up. I think they're going to move up a lot more. But inflation is the driver of this. I mean, de-dollarization is also driving gold demand, but overall inflation is pushing up the price of everything.
Yeah, for sure. Yeah, I definitely can see that in the numbers and in the charts. So any final thoughts for the audience, Peter?
No, just, this is our time. I mean, people who have been in the gold space, it was very lonely for a while, and we weren't making much money, and all the money was being made in tech or crypto, and we got a lot of, ribbing for being wrong and being gold bugs. But, we were right to be concerned about the macro picture, and to know that ultimately all of this was going to mean much higher gold prices, much higher silver prices. It took longer than a lot of us expected for these problems to manifest the way they have in metal prices. But I think now that it's happened, I think a lot of people who maybe were second guessing themselves can rest a little easier that we were right. And maybe a lot of people who didn't take us seriously, maybe they'll, take another look at what we're saying, because it's still not too late to get into the trade. Still not too late to get out of the U.S. stock market, which is still a lot higher now than it was years ago. But I think what's happening now is a vindication that what we've been saying is right. But if what we've been saying is right, there's some bad stuff that's coming. Right? What's happening now with gold is a harbinger of that. It's a warning that some bad things are around the corner. And most people are whistling past this graveyard. They completely dismiss what's happening in gold and silver. They think it's just a speculative mania, or it's a bubble, or it's irrelevant. It's not. It reminds me of the blow up in subprime, where everybody just ignored that and they said it's contained, don't worry about it. It wasn't contained. It was indicative of a much bigger crisis. It was a tip of a huge iceberg. And that's what's happening with precious metals. It's the tip of an iceberg. There is a much bigger problem beneath the surface that people are oblivious to. And then when it hits, and we're going to get this crisis, it's going to be a dollar crisis and a sovereign debt crisis. People are going to be saying exactly what they said in 2008, 2009. Nobody could have seen this coming. Totally out of left field, 100-year flood, but it's not. It was very predictable, just like the financial crisis was. But most people are, not going to do anything. So hopefully the people that are listening to this have already done something. And if they haven't, get going.
Yeah.
Don't press your luck. Get some gold and silver from Schiff Gold. Contact my guys at Euro Pacific Asset Management so we can help manage a portfolio for you. Or if you're a do-it-yourselfer, buy my funds. You can learn about my mutual funds on the Europac website, europac.com, and you can buy the funds no load at a discount broker. But whatever you do, do it quickly.
Yeah. And shout out to Adrian Day. He's one of our instructors for the Commodity University.
Yeah, and he manages a gold fund. So he's a good stock picker. Even though, so the stocks that he's got, I've got a lot of confidence that these things are going to produce really big returns in the years ahead. And don't forget, listen to my podcast, Peter Schiff Show, and every Friday I do the gold market wrap on the Schiff Gold YouTube channel. So, make a habit of listening, subscribe to my YouTube channels, follow me on X. I'm constantly posting on X. I do all my own posts, right? So you're getting my thoughts right from my mouth when you're following me on X.
Yeah, so we're not getting the AI bot of Peter Schiff or none of that.
No,
Right?
there is no AI Peter Schiff, not yet.
That's good. Well,
I'm sure they're probably coming.
yeah, I'm sure it's on the way. Well, appreciate your time, Peter. You all be sure to hit the subscribe button. Also connect with Peter at the many different sources that he has where you all can connect with him, engage with him. He engages with the audience on his X account. He doesn't shy away from the smoke. He's willing to stand in the fire and such. And so, Peter, appreciate you just for all the work that you've done in this industry and the inspiration that you have given many investors in this sector. So thank you for your time.
All right. Thanks a lot. Appreciate it.